I'm going to share with you some simple but profitable day trading strategies that allow me to profit off of price action and market trends that also work amazingly well to grow small trading accounts and get you to your first $5,000 to $10,000 trading months. And I'm saving the best strategy for last, but you need to know everything in the video to understand, so make sure you stay to the end. All right, so first we need to master trading strategy fundamentals. There's a few things that we need to look for. In any trading strategy, we need a thesis. So what are we aiming to do when we're approaching a trade in the market? Are we looking for a place in the market where price action is going to flip, or are we trying to play a continuation on a trend and follow the trend? Okay, the second thing that we need to pay attention to are our trade tools. So what indicators do we need on our chart, and what tools do we need to be able to quantify our entry, exits, and the overall position? Okay, we're gonna get into some tools in a second. Okay, the third thing is trade criteria. So what are our signals to enter the market? What are our signals to exit the market? And what are some signals for us to not enter the market at all and avoid taking bad trades? The systems we're going to be talking about today are going to be continuation systems. So we're going to be following the current trends and profiting off of the current move of the market. First thing we need to do is identify what a trend is. A trend is simply a move in the market that has a high, a low, and then a secondary higher high and a secondary higher low. The same thing is true for a downtrend. A downtrend has a first low, a lower high, a second lower low, and a second lower high. Okay, once we have these 4 points of contact, we can confirm that we have a trend. This is going to be the foundation of us trading and following trends. Okay, the second thing that I'm going to be looking for is a break of structure. Now, when we have multiple contact points on a trend, and then we see the price come and break through that level, right, that's going to signal the potential of a new trend. And the earlier we can get into these trends, this can oftentimes confirm the new beginning of a trend. The third thing we're going to be looking at to confirm a trend are moving averages. So today we're going to be using a 20, 50, and a 200-day exponential moving average. Okay, simply put, as candles form, the 20 EMA is going to be taking the average of the 20 most recent candles, and it's going to be plotting that line. So the more aggressive movement we get up, the 20 is going to be the strongest, and then the 50 is going to take 50 candles worth of average. So it's going to be a little bit below it. And then the 200 or any larger long-term EMA that you're going to be using is going to be taking an average of all of the price data with exponential emphasis on the most recent candles to plot that average line down here. All right, and so when these are all layered on top of each other, this can indicate trend direction. And we're gonna be using these EMA stacks in the systems we're talking about today. All right, so let's get into strategy one, which is going to be a Fibonacci and EMA continuation strategy. So the thesis around this trade is we want to be able to confirm the trend using what we just learned, and then being able to use Fibonacci tools to catch areas of the market where it's going to drop, then play the bounce continuation on the trend. All right, the tools we're going to need for this system are exponential moving averages, Fibonacci's, and something called a Pro Plus. Now, if we want to add EMAs right on chart to TradingView, you can just type in EMA and you can use the moving average exponential right on TradingView. But if you want to have access to the EMAs in the Pro Plus indicator, you can head over to our Discord, which I'll link below this video. Go into our resources and learning. Everything you're going to need is going to be in this section. So first thing that we need to do is confirm the beginning of a new trend. Do we have our break of structure? Yes, we have our contact point, contact point, contact point, and then the price breaking through there. Do we have our higher highs and higher lows? We have a high here, a low here, a high here, and a low here, which is confirming that we do have a continuation of a trend. The third thing that we need to check is our 20, 50, and 200-day moving average showing green, meaning that all of these are layered on top of each other. If the 20 is over the 50 and the 50 is over the 200, this indicates that this short-term price action is strong enough to have the most recent price action over the more longer-term exponential moves, which is going to indicate the strength of a positive trend. So what we want to do now is start allowing for the price action to start breaking through these moving averages and having some sort of bearish movement. Okay, so at this point, we see this aggressive trend has broken and we're starting to see a bit of a retracement in the market. This is where we're going to be adding our Fibonacci. Okay, there's a few ways we can do this. All right, so you can go over into your Fibonacci retracement tool here. Then I'm going to go off of my most recent low before the price action cuts up and we get these crosses on these moving averages. I'm going to click from that level and I'm going to go up to my high. Now that's going to give us levels over here. Now this is how Fibonacci works. When we're getting a move up in the market, this one level is always going to be the beginning of our trend. And then this 0 level is going to be the high of that price. And we're going to use these different levels to time reversals in the market. Okay, so these levels are oftentimes going to be areas where we'll get big reversals in the market. Okay, we oftentimes pay attention to this 50 level, and then the 0.618 is the golden ratio in Fibonacci, which is a full retracement and continuation of a trend. Okay, what we can also do is go into our settings over here and put in this exact criteria, which is going to show us the 0.382 level, which is something that we use on the private side of our trading team to be able to use more accurate Fibonacci projections. So for today, I'm going to use this. So we're going to start actually at the top here and go to the bottom level there, drag this over a little bit, and that's going to give us the 0.382 level. The next thing that we want to add to our chart is something called the InnovaTrade Pro Plus indicator. Simply put, when the price drops below this gray band, we're going to get a highlight signaling that the price is undervalued relative to the normal volatility. All right, think of it when you have a highlight down here, it's undervalued, and when you have a highlight over here, it can be overvalued or a good place to start taking profit on your trades. And now what we want to do is wait for this price to start coming down and start thinking about getting into a position right in this region. All right, so price comes down. Now we get a candle close into our level and the price is reversing up. When you're placing a stop loss, you always want to be paying attention to the previous price action and figuring out an area that isn't a place for potential support and resistance. So if I look over here, I see that previously this was a pretty significant level. So I have price breaking above, catching support, bouncing off of that high point here, hitting resistance on the other side. And now this is going to potentially be an area of support. And what we like to do is place our stop loss underneath important levels here on the chart. All right, so now we have price continuing to move up in our direction. Now at this point, we can start looking at potential take profit zones. Okay, there's a bunch of ways to do this, but an interesting way I've noticed works nicely with trend continuations is switching from a 5-minute time frame, which is what we're using to trade these continuations, and going up by 3x and using a candle close in the cloud highlight here on our InnovaTrade Pro Plus indicator as a time to start scaling out of our position. So we go ahead and play this forward. All right, in trading, you always want to be minimizing your risk. So on a 5-minute frequency, when you do see a highlight strip here, this is indicating strength in the trend. All right, and this could be a good time to start reducing risk on your position. So that way, if the price does come down, you're not going to lose anything on the trade, and it's essentially a risk-free trade. Okay, so we're gonna go back to a 15-minute time frame. Notice how we don't have a highlight strip yet on our 15-minute frequency. So we'll go ahead and play this forward. Now at this point, we are getting a highlight, which means that this could potentially be in an overvalued position. And these are good areas to start taking profit. So here was our first strip. This candle had its first candle close right here with a highlight strip, which is where we can go ahead and start exiting the trade. And you can see this was a 4.68 multiple of our initial risk. So had the price have come down, breaking through our support levels and hit our stop loss, we would have risked one risk factor. So whether it's $25, $50, $1,000, okay, we would have lost that amount. But by using that Fibonacci level and using our cloud highlight, we were able to get 4.68 times that initial risk, meaning that we would have made on a $100 risk $468, which means we can essentially be wrong 4 times in a row. And we only need to be right 25% of the time in order to still be profitable trading with these types of risk rewards. Now, there are going to be losses in trades. A lot of these are going to lose, but the idea is to follow the trends, generally speaking, and use these tools to be able to have precise entries. All right, so let's take a look at another example. So we have a nice uptrend here. We have lows here, lows along these, and then price comes through, breaks it and tests it on the underside and is now starting to potentially make a move lower. Okay, this is going to be that break of structure that we're looking for. And now we just need to see if we're going to form a trend to potentially take a trade continuation into. All right, so let's see if price breaks down below these moving averages. Okay, so we do have a confirmation of a new low. Now, what I'm looking for is we have our lower low, a lower high, now a new lower low. We just need one more lower high to confirm that this is a full trend. Then we can start using our fibs to try to play a continuation to the downside. All right, so now we have our 20, our 50, and our 200 all layered on the same side, which is going to confirm our new trend in this direction. Okay, so I can take my fib from this level here to the most recent low here before we get all of our moving average crossed and look to potentially take an entry here in this 38.2 zone. Now, we also want to be looking at previous levels to place our stop loss on this position. What I ideally would want to do is place a stop loss over recent important levels so we can look to enter our position around here, place our stop loss comfortably outside this level. Take profit is going to be determined. Okay, you can see price action came up through, rejected off of that low into this resistance zone over here, and then started to break and confirm a new low. Okay, so once again, here is where we're starting to get a highlight on a 5-minute. So in situations like this, okay, it's always a good idea to not place your stop loss back at entry, because you can see off of our initial position, we actually broke up a little bit past our entry and found a significant level in this region. What I like to do in situations like this is place my stop stop loss a little bit lower. So now we're going to a 1 to 855 risk reward, meaning now we're risking less on the position. So now we get a significant move down in price. So now I want to go ahead and check on my 15-minute frequency where we're going to start getting our highlights. So you can see we have a highlight strip here. So as soon as this candle closes, we can take profit. This was the close of our candle right in this region, and that got us off of our initial stop loss, once again, right around a 3.22 to 3.5 risk reward. So once again, we're aiming for the system. Anything over 1 to 3 risk reward is going to be nice. All right, so let's get into strategy number 2, which is going to be a fair value gap Fibonacci and EMA continuation. So we're using similar principles, but we're going to implement something called a fair value gap to increase what's called confluence on trades. So we can actually prevent a lot of the losses by adding some of these things. All right, once again, we have our break of structure here, and then price is moving up, confirming this break and confirming a new uptrend. All right, so at this point, we already have a high, a low, and then a confirmed high here, as well as highs and lows over here. So we do have the establishment of a new uptrend. So now once the price starts to sell off on this trend, not only are we going to be drawing our fib from the most recent low before the flip of the moving averages, but we're also going to start looking for fair value gaps. Now let's go over what a fair value gap is. So you can see right here, the price had an issue breaking through this level, and then it finally did have a major break in price action. All right, so when the price does finally break through these areas, in this pocket, there's going to be areas of liquidity where the orders skip through, and there's potential for a lot of buy orders sitting at that level. So the way we're finding a fair value gap is by identifying a 3 candle pattern. Where we have that breakout, we have 1, 2, and 3. And in this area, we had the first candle's wick high not overlap with the third candle's wick low. And this goes in both directions. So our fair value gap would be starting from this candle level over here up to this low candle right there. So this is going to be our bullish fair value gap. All right, we can start evaluating these all over our trend. So we can see overlapping here. We have our wick here with a low wick here. So we also have a buy side fair value gap in there. High here, overlap. We have a small fair value gap in here. Now the goal of this system is to find a fair value gap that also lines up perfectly to where our Fibonacci retracement is going to be. Once again, we can use this one, or we can use our standard Fibonacci as well. So you can see price reacts nicely off of that first fair value gap and starts making a new low. So once the price starts coming down to our 61.8 level or our 38.2 level, this is where we can start looking to set up a long position, right? So long take profit's going to be determined. We're going to place our stop loss below critical levels. I'm seeing significant price levels in this region. So ideally, we'd be able to place a stop loss outside of these prices. So now we can see price comes down into that pocket of support here and then starts flipping. So we also saw a highlight in entry. This is also something you can start looking for. A highlight into entry is oftentimes a good indication that we could see a nice flip just off the fact that it is undervalued. Right, you can see we got our first highlight strip here on a 5-minute. So once again, if you want to reduce risk below that low, and that can shave off some of the implied risk on the overall trade. We're just trying to play continuations on the trend. So if it's going to break below this level on this region, if we're going to break below this, it's going to break this temporary uptrend, in which case we want to be out of the trade already because we're trying to trend follow. So we're going to wait, price comes up. Okay, now we can switch over to our 15-minute frequency. Also, if you want to, you can click this button over here and click on a 2-pane, click here, add to a 15-minute frequency. And now you can start watching on the different frequency as you're watching the 5-minute frequency on here. Okay, I'm going to keep it a big view for now. You can see right here, we got our first candle close here at a 15-minute highlight, which in this instance would give us a 1 to 5 risk reward. All right, so let's take a look at another example. So we have a break of structure here, price action pushing above this level, high established here, low, higher high, higher low. Everything's checking off for a positive move in trend. We also have our 20, 50, and 200 all lined up nicely here. So we can see the price is starting to move down. Now I'm going to go from this high over here to our most recent low. Big move up in price. So we have technically a fair value gap here and another fair value gap from the high of this candle into the next wick right there. Okay, so we have 2 fair value gaps lined up here. So once again, we can start positioning ourselves at that Fibonacci level. Take profit to be determined. Stop loss placed outside of this critical level. Price comes off and immediately catches support off of that fair value gap. Now, there's something interesting noted here. Whenever we're seeing candles come come down and not completely move through the fair value gap and either close on the above side of this dotted line, okay, that's indicating that this fair value gap is being respected. Okay, if we get a close more than halfway through this box or even below it, this is oftentimes a signal that the fair value gap is getting completely ignored and it could slice right through it, basically like butter, and not even be effective at all. But in this situation, we do have price react nicely off of that level. So once again, now we can watch our other indicators, okay, to see what the price is going to do. Now, one thing to keep in mind in these trades, when something like this happens, you're going to be in euphoria and you're going to be like, oh my God, it's moving so nicely. And then you're going to see this happen and it's going to almost go back down to entry. You're going to feel like, oh my God, you're going to start biting your nails again. You're going to start being worried about where the trade's going to go. Keep in mind that you shouldn't be having this be a roller coaster of emotions, right? All you're trying to do is trade a continuation of a trend. Look at how sporadic and crazy the price action is previously. Keep that in mind when you're in trades. I like to not even look at my trades a lot of time. Set it up, have alerts set, and you're good to go. Okay, with these ones, you have to manage it a little bit more, but try to remember that you are going to get volatility when you're trading these. So price once again comes up. All right, now we got our highlight, so we can reduce risk on our 5-minute. Now I'm gonna check a 15-minute frequency. So we do have a candle close right at this level as soon as we got a highlight. So we actually would have been able to capitalize on a move similar to this before we get a sell-off, which is going to put us at a 3.39 risk reward, okay, versus being down here, which is gonna put us at 2.93. This is the strength of using the NevaTrade Pro Plus indicator, okay? This is free for you guys to use. It's just in the Discord. Go ahead and you can add it right to your chart. All right, let's get into strategy number 3, which we're calling the unicorn continuation strategy. Now, whenever we have everything lining up perfectly, all of our confluences lining up, we like to call these unicorn setups. They don't happen often, but when they do, we have a ton of confluence and a ton of belief that these should go in our favor. Let's take a look at how to trade these unicorn setups. So do we have confirmation on a new uptrend? All right, we have all of our moving averages stacked on top of each other. We also have high, low, high, higher, low. So now what we want to do, once again, draw our fib from the high here down to the most recent low before this first move of all of our moving averages being crossed. All right, so now we have a new high. So we want to update our fib to this most recent wick. And now price is coming down closer to our entry. So we do have a fair value gap, little one in here. The biggest break of structure fair value gap, I'm talking about this level here that was broken. So we have resistance, 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 big break. Okay, this is a super, super important level, right? Once again, a lot of orders probably got skipped through. We're gonna find this big candle. We're gonna go to the candle wick high right in here to the low candle wick of this move. And you can see our Fibonacci is lined up perfectly in the median of this fair value gap. So I can go ahead and extend this out to the left as well. And we're seeing a lot of important levels being hit on this trade. So continuation on the trend, price is starting to pull down to our level. The third layer of confluence, which is going to be the unicorn element, you can see is our 200-day moving average. If you're having the shorter term moving averages that are underneath all these other moving averages with the price going through these ones and sinking into this one, oftentimes that's going to be a big bounce point. Now, if we can have the price lining up so that the price is coming down to our 200-day or longer term moving average, whatever frequency you're trading, additionally to the fib level for the continuation, additionally in a fair value gap where a bunch of orders are probably still sitting and it's an area of heavy buy side liquidity, this can be a potential significant bounce point. So once again, halfway through our fair value gap, candle comes through it, closes above it, stop loss comfortably outside of that region. Okay, so we got our response off of here. All right, so we do have our first highlight point at this region. So this could be an area to potentially start reducing risk. All right, now we're gonna flip to our 15-minute frequency and watch for our highlight to close out the strength of the trend. So once again, this is the reason why when we're reducing risk, we don't wanna reduce it to our entry. We want to reduce it below the area where we saw the price go through our entry and stop out, because this is going to be a fresh low. If a fresh low is made, it's a new downtrend, which we wanna be out of. If it double bottoms or has a safe response off of that level, we want our stop loss to be safely below. So even if we started here and reduce our risk by say half, now we're still in this position. Whereas if we just reduced it to 0, which seems intuitively like the smart thing to do, we would have been out of this trade and we would have lost out on a potential full trade profit. And then boom, we got a crazy take profit. All right, to where we get our first candle close here, which is at this level, probably right around here for our take profit. So you can see of all these trades, we have 1 to 5, 1 to 7, 1 to 3. These are all what we call risk factors adding up. So say we have 10 total risk factors after say 3 winning winning trades. Say we took a total of 10 trades and we had 7 losses, right? So we have 10 total trades minus the 7 risk factors. Okay, so -7 risk factors, but we have positive 10 risk factors. That means that this 10 minus 7 is going to be 3 positive risk factors times, say, 100 is going to be $300. Okay, so if we have $300 in profit and we're literally losing 70% of the time, this is how we're able to be profitable. So now we can work on refining our system down, getting better at doing these types of trading, using other confluences to be able to increase this to say 50% win rate, 60% win rate, and allow you to start making $1,000, $2,000 every 10 trades, risking $100, $200 per trade. And that is how you can start following trends, especially when the markets are moving strong in one direction. There's so much more to unpack with trading. You have to journal your trades, track your progress, learn about your own stats to be able to improve yourself over time, right? And that's exactly what we're doing in the private side of our trading community. So we have a free Discord, right, where you can take advantage of all of these free trade ideas. We're going to be using some of these trade alerts and showcasing them over in this alerts channel here. Okay, we had a full profit trade on FTM. We're going to be dropping more trades, but additionally, we have a whole private side of our community through our education where we're sharing all sorts of real-time trade ideas. We have all of our premium students sharing ideas with each other, mastering their trading. But anyways, guys, I hope you found this video helpful. Let me know in the comments which system was your favorite and why. If you want to learn about reversal systems, not continuation systems, you can check out some of those other videos that I'll put in the end screen right here. If you're still here, make sure you hit the like button, subscribe to the channel if you like trading and investing. All right, it's a new year. Join into the Discord. Take advantage of the free space we have in there for you where people are mastering these types of concepts. And if you want to take it to the next level, have mentorship and a team of people who are learning all of these systems in way more detail, we also have the private education that I'll link below in this video. That's all I have for today, guys. Until next time, I will see you all in the next video.